Today we are diving deep into one of the most groundbreaking developments in the cryptocurrency space. The leaked news about Blackrock'S XRP ETF filing and the ensuing $200 billion inflow anticipated from institutional investors, primarily pension funds. This development signals a seismic shift in the way XRP is perceived and valued. In the global financial market, Larry Fink, the CEO of BlackRock'S, one of the world's largest asset managers, has reportedly leaked information that confirms XRP is set to replace Bitcoin in many 401k retirement portfolios. This alone marks a monumental endorsement, suggesting that $5,000 per XRP is not only a plausible price target, but a minimum expectation within the next few years. To understand why this news is so significant, we need to look at the institutional landscape. BlackRock'S entry into the XRP space represents the arrival of mainstream financial titans who bring with them trillions of dollars in capital, unlike retail investors or speculative traders. These entities invest based on rigorous analysis, regulatory compliance, and long-term strategic vision. Their endorsement gives XRP unparalleled legitimacy. The sheer scale of $200 billion potentially pouring into XRP from pension funds is staggering. Pension funds are conservative by nature, allocating assets to minimize risk while maximizing returns for millions of retirees. That they are preparing to move into XRP signals a profound belief in its stability, utility, and growth prospects. Alongside this institutional wave, the XRP community on social media is witnessing an unprecedented surge of enthusiasm. The XRPF has exploded on Twitter, amassing over 1 million music tweets. This grassroots momentum shows that the retail crowd is also highly bullish, amplifying the institutional push. These combined forces, massive institutional capital and passionate community support, create a unique synergy that could propel XRP to new heights. From a technical perspective, the charts are also aligning with this bullish narrative. Historical data reveals what is called the ETF approval pump pattern, where assets experience exponential price increases following the green light from regulators to launch ETFs. Analysts project that XRP could multiply by as much as 75 times its current price. During this phase, if XRP is at around $70 today, this would place it near the $5,000 mark within a few years, even before the ETF approval experts foresee XRP reaching 500, fueled by anticipation and early buying by savvy investors. Adding a compelling twist to the story is the strategic maneuvering by other financial giants. Reports have surfaced that Goldman Sachs is deliberately shorting Bitcoin to free up capital for acquiring XRP. This move is profound because it signals a shift in institutional preference. Bitcoin has long been the king of cryptocurrencies, dominating market capitalization and investor attention. However, XRP's increasing utility in real-world applications, superior transaction speed, and scalability are making it the preferred choice for many institutional players. The implications of Goldman Sachs' strategy are significant. When major players reposition their portfolios, it often precedes major market movements. Shorting Bitcoin to buy XRP suggests a belief that XRP will outperform Bitcoin substantially in the coming years. This kind of institutional confidence, combined with BlackRock'S ETF and the influx of pension money, paints a bullish picture for XRP's future price trajectory. But what exactly makes XRP so attractive to these institutions? Unlike Bitcoin, which is often viewed primarily as a store of value or speculative asset, XRP is designed as a transactional asset, optimized for payments and liquidity provision. Ripple's technology facilitates cross-border transactions with incredible speed and extremely low fees. This practical utility gives XRP a solid use case, differentiating it from many other cryptocurrencies. Institutions looking to streamline international payments, lending, and asset tokenization see XRP as a foundational building block for the future of finance. Moreover, XRP has maintained ongoing regulatory dialogue with governments and financial regulators worldwide. Ripple's proactive approach in engaging with regulators has reduced the legal uncertainties that have historically plagued cryptocurrencies. This compliance-first stance reassures institutional investors who require regulatory clarity before committing significant capital. This is another reason why pension funds and asset managers are comfortable backing XRP in large amounts. We also cannot overlook the viral social dynamics driving XRP's momentum. The XRP Army is a unique and dedicated group of supporters who actively promote XRP's adoption and educate new investors. The social media blitz with XRP ETF has raised awareness. Exponentially viral trends influence retail investor behavior, which in turn impacts market liquidity and price action. The alignment of social enthusiasm with institutional buying power creates a potent feedback loop, reinforcing confidence in XRP's growth prospects. On the technical analysis side, several crypto experts have identified bullish patterns reminiscent of historical rallies seen in Bitcoin and Ethereum. These patterns suggest a strong probability of parabolic price increases in the near future. The ETF approval is often a catalyst for such rallies, triggering widespread buying from institutional and retail investors alike. If XRP follows this historical precedent, the coming months and years could witness an extraordinary price surge. So looking beyond just the price, Blackrock'S XRP ETF filing really signals a broader trend of cryptocurrencies moving into the mainstream financial ecosystem. ETFs provide a regulated and accessible way for traditional investors to gain exposure to crypto assets, without dealing with the complexities of direct ownership. Blackrock'S involvement, while it signals to other asset managers and financial institutions that XRP is a viable and attractive asset for diversified portfolios. It's like a green light for others to consider. Don't you think? Furthermore, the influx of institutional capital is expected to bring enhanced liquidity and market stability to XRP large-scale investments. You see, reduce volatility and create a more robust trading environment. It's quite a promising development. This stability attracts even more investors from retail to hedge funds, creating a virtuous cycle of adoption and price appreciation. It's also important to consider the macroeconomic context as global economies grapple with inflation, currency devaluation, and uncertain financial markets. Alternative assets like cryptocurrencies become increasingly attractive. XRP's unique attributes, speed, cost efficiency, and institutional acceptance position it well to capture a significant share of the global digital finance revolution. In conclusion, the leaked news of Blackrock'S XRP ETF filing, combined with a $200 billion inflow from pension funds, Goldman Sachs' strategic positioning, and the vibrant XRP community's backing, create a perfect storm for XRP's meteoric rise. The $5,000 per XRP price target is no longer a far-fetched dream, but a tangible possibility grounded in real financial shifts, market dynamics, and technological advantages. If you are an investor or simply a crypto enthusiast, paying attention to these developments is crucial. XRP is evolving from a niche cryptocurrency into a core financial asset with transformative potential. The upcoming months will be critical as regulatory approvals, institutional moves, and market sentiment converge to shape the future of XRP and the broader crypto market. Thank you for watching. If you found this detailed analysis valuable, please like the video, leave your thoughts and predictions in the comments, and subscribe for ongoing updates about XRP and the cryptocurrency world. Disclaimer: this video is for educational and informational purposes only. It is not financial advice. Please do your own research and consult with a financial advisor before making any investment decisions.